Hey guys, Akil Stokes here. Welcome back to our weekly Trading Edge video. This week we're going to do something special. Instead of taking you on a stroll around the market, showing you the best opportunities that are on my radar for the week ahead, like we typically do, I'm going to give you guys a peek behind the curtain of one of the conversations that we had in this week's live trading room, right? The live trading room is something we do every Tuesday, Wednesday, and Thursday on the platform. And yes, a lot of the time is meant looking at trading opportunities, practically applying the concepts that we're teaching you and that our students are learning through the courses, but also it's talking about the other aspects of trading. In today's video specifically, we're talking about strategy development, the process that one needs to go through when it comes to building a strategy, and answering the question of when should I be ready to trade that strategy? Now, what I want you to pay attention to in this video is not the specifics of the strategy. We're talking about an RSI breakout strategy, but more so the process. So how do we develop the building blocks? What do we talk about observations? How do we add filters, tweaks, and stuff like that? And of course, on the back half of the video, looking at the concepts of progressing through your trading and knowing when is it time to trade and when should I kind of keep tweaking and keep working on the said strategy and kind of the pros and cons of doing that. So I hope you guys enjoy. As always, hit that like button, do me a favor and support this show by doing so. And I hope you guys enjoyed the video. Any comments, leave them below. I read through each and every one of them and I will give you an answer. All right. But yeah, so something you can do is let's look at when does the RSI go past our extreme. And let's say you were trying to create a breakout strategy, or maybe you're just using the RSI. The stochastics would probably be a little better for this, but maybe you're using an indicator as a complementary signal with your breakout, right? Well, let's look at this. Where do we go over? I'm gonna try to do my best to kind of see this on a chart without cheating. We go overbought right here by the traditional sense. Let's draw some lines out here. We dip back below. We do it again here. And then we'll kind of go in time a little bit. But let's look at these, right? If you were to buy as soon as we went overbought, would it be beneficial? Well, this one went up a little, sure. This one went up, went down, probably more of a break even. Let's continue along and see. Looking for any type of, oh, got one. So here's another one right here. So we went, and we're using just the 70 right now. And you can adjust this whatever you want. You can make the 60, whatever. This one, overbought right here. And then we went overbought again, I'm going to say right here. Well, what happened? Well, again, we did continue up. And then this next one, I don't know what happened here. We did continue up again. So by doing that, guess what you guys just did? Is this not the baseline of a strategy? Your hypothesis is if RSI crosses blank line, then it goes up. Is that not the starting point of a breakout strategy? Now, something you want to pay attention to, right? Aside from maybe, what is it? Even this one right here. The next question you're asking yourself, I'll just scroll one more. The next question you're asking yourself is, okay, so when we broke out, did we break out a lot or a little? Like as far as like the continued movement, did it like super break out and run for 100 pips, or was it like a few candles? A few candles. So we know from a strategy development standpoint that if I'm looking for targets here, they're going to be short and quick, right? I'm not looking to hold this on. This is not a trend continuation following strategy. This is something where maybe I'm out the very next candle. This is something where I'm out for a few pips, right? More like a quick, I don't want to say a scalper because I don't believe in scalping, but you guys get what I'm saying, right? You're in it. You're not holding this for days. I mean, you are on a 15-minute chart though, but we're in and out because we start to retrace pretty quickly. So that's one thing you write in your notes. Another thing to notice is that, okay, on these breakouts, the very next candle, did any of them pass the low of the breakout candle? right? We're talking about stop losses being at the lows right here. Stop losses being at the lows right here. Did any of these initially break the low of the breakout candle? Well, I don't see any. Did you? Could be wrong. No. Well, now you got an idea of where a stop loss is. You're safe below here. You know if price breaks below here, you're wrong. So now you deal with the issue of, okay, well, I know that we only rally a little bit. A stop below the breakout candle is probably going to give me an inverse risk reward. So now we go back to the question that we had earlier. That means if I have an inverse risk reward, a 1 to 2 risk reward, right? Which is, it should be reward to risk, but you guys get it. We always say risk reward because it just rolls off the tongue better. What do I have to do to get this strategy to work? Because a 2 to 1 or a 1 to 2 risk reward with, let's just say, a 50% hit rate is going to leave me in that negative black space. So what do I need to work on? So two things, right? We can either have a really, really high win rate and say, hey, great win rate. I'm going to take a negative risk reward, right? Or we can ask ourselves, okay, how can I make this risk reward a little bit better? And maybe you go back to what we said before, where it's like, okay, you look at these entry signals and you say, okay, well, I know price doesn't go below the candle. What if I use my fib, right? What if I test out, do we cross the 618? This one came to the 382. You know, initially didn't come anywhere, but eventually came to the 382. What if I start using the 618 as my stop loss? Okay, none of these situations came to the 618, right? So now maybe I've changed my risk reward from 1 to 2 to 1 to 1, maybe, or 1 to 1.2, who knows what it is. But you can see how you start digging in once you kind of know what to attack. You guys follow me? That is strategy development. It's super fun, but also super frustrating. And it's a lot of data. Yeah, it's cool because you get to be creative. And it's a little bit easier for me saying it because I've been through this rodeo. If I can't tell you how many failed strategies I've had. So again, I kind of know where the answers are at before, and know where the answers are at. I mean, I know where the potential answers are at. So it could get a little frustrating when you get stuck and you're newer. But yeah, but that is a basis for a strategy. And then, hey, if you notice that, hey, this 70% mark for the RSI is getting you in a little bit late, maybe you adjust that RSI and make your overbought 65 or 66, right? Instead of 30, maybe it's 33. Or maybe you're getting bad signals and you want to increase it. Hey, let's put it at 75, right? You start paying attention to that stuff. But it starts by just going through the chart and developing a theory, saying, okay, oh, look, we went overbought again right here, this candle, and then we did go up a little bit. Or look at this candle, I'm like, man, I missed this previous move. If I would have got overbought at 66, I would have been in a candle earlier. And you observe, you observe, you observe. You see this one right here. This was our biggest one. Overbought right here on this candle. Man, this one rallied up. Right? We didn't even talk about using the moving average. Again, maybe using moving average as a filter. Maybe you have one right here where it's like, hey, this is a bearish signal right here. This one obviously would have been a loser, right? Next candle. Tested the highs. But remember that filter we added? That moving average? If a signal's only valid if it's on the appropriate side of the moving average, this would have been a no signal because this filter would have kept you out of it. And now you avoided a loss. But you also have to pay attention because if you have the wrong filter in, you may chop up a lot of your winners. So then like you got to analyze the filter and be like, okay, should I use this moving average or should I use a 60 moving average? Like what should I use here? So it's fun and frustrating is the best way to say it. You got to be a trading nerd to enjoy it, to enjoy the suffering. Could you guys tell I love strategy development? I love it. I love it. Noel says, I can see myself trying to find perfection and not knowing when a strategy is good enough. That's a very common problem. That's also the problem that comes with the super, super smart people is the pursuit of perfection. My best trading friend, my best friend, and he was there for my best trading friend, literally the best man at my wedding. We were supposed to come in and dominate the trading industry when we were young and fun and full of energy. And he's a brilliant trader now, brilliant options trader, brilliant. Zero confidence in teaching others. I keep trying to bring him onto the platform and say, hey, let's bring you on. Let's get an options division going here. But he has no confidence in like teaching others, even though he's brilliant. But brilliant strategy developer, but never, and this is years ago, never actually followed through with a strategy because it was never good enough. And he had these super profitable strategies, but he'd always go back and tweak it because he's like, well, I'm winning at 70%, but I should be winning at 75% or 80%. And he couldn't understand and again, brilliant mind. He couldn't understand the fact that, hey, there's no such thing as perfection in trading. Same thing as the guy I worked with once who his whole goal was to have a 99% win rate. And he did it 1 month. It was also a negative month. He lost money, but he got his 99% hit rate. Yeah, figure that out. That is a hard part. When do you know when it's good enough? And I would say this to the short answer to that question is, it's good enough when it's making you profit. And in trading, because we are working on a timeline of life. Let's not get this wrong, right? I don't want to get morbid, but we're looking at this timeline, and at the end of the timeline, we die. Like, I hate to say it, but it's the reality. Let's not make it something it isn't. But at the end of this timeline, you die, right? So every second, every minute that passes is pushing you closer to death. Again, I apologize. So the idea is not to, and it could be death, it could be retirement, it could be other things, but death is just something that we all share in common, right? So the more you push something back, right, the closer you are to here, meaning the less time you have to benefit off the stuff you're doing. I would much rather see you do this. Let's say you have a strategy and you develop it. You developed it right here. It's profitable, but not like super get you rich and get you a spaceship ticket to the moon type profitable, right? So you say, hey, I'm not going to trade it. I'm going to keep working on it. I'm going to keep working on it. I'm going to keep working on it. And you do it, years pass, and you finally get it to where you want it to, and now you're right here. I would say this, and this is my personal philosophy. Why not start trading it here? It's profitable, right? So it's making you money. Why not start trading it here? As time progresses, can you not still work on it and refine it in the background? What would you guys say? Is that possible? Can I trade something, make money off of it, and in the background still try to refine it? Definitely. And here's the secret. That's what we should be doing anyway. We should always be trying to refine our strategy and improve it. So now, let's say it still takes you 5 years, whatever it is, to take it to like level 2, where it's super profitable. So you still have the super profitable point right here, but you also spent all this time making money. So now you have more money in your account by the time you get it to that super profitable level, which just massively increases your trading account. It accelerates that wealth. And you've done nothing different in the process aside from decide that I'm going to start trading it right now while still working on it in the background, versus I'm just going to work on it in the background while not trading it. And the simplest answer is this. If you have something that makes you money, why wouldn't you do it? Although I would say this is a larger issue as well, because you would think about investing in general. How many people don't invest? How many people would look back and be like, man, if I just threw some money in the market 10 years ago, I would have had this much money now. And it's like, well, why didn't you? It's the same thing. You could have easily put in whatever, $100 a month into the market. Maybe not easily, but you could easily put some money into the market 10 years ago and just let it sit there, maybe add to it every month, every quarter, and you would have had a bunch more money now. But why didn't you? And you look back and you're like, well, what would I have had now if I invested this much back then? And you're probably kicking yourself. I kicked myself off some of my investments. I told you those stories. I was a really good stock trader, but I made some dumb decisions because I was young and dumb. And dumb decisions as far as just taking stuff out and getting happy over profit instead of just leaving it in there. So why not? Start now. I mean, not now. Start when you're ready. Investing, you start now, but start when you're ready. But once you have something that prints you money, start trading it live. Make your money. You can always do the rest in the background. Hope you enjoyed the show. Before you go, remember to hit that like button, subscribe if you're new. Also, make sure you check out the Trading Coach podcast. 3 new episodes available on a weekly basis. Really cool episode this past week about prop firms, which has been very popular. So make sure you check that out. And a lot of cool episodes to come this week as well. So it's available on your favorite podcasting app. Check it out.